Hello, everyone, and a warm welcome to all of you to the first mentorship session of the January edition of CMT Association Investment Challenge. It's a great pleasure to kickstart this session with Tyler Wood, Managing Director, CMT Association, and Sovit Manjani, CEO at YUBHA, co-founder and head of trading strategies. Thank you both of you for joining us today. This is a special mentoring session where our mentors will be taking us through their journey, share their experiences as in how they got started in the financial industry and why they felt the need to earn the CMT designation and so on. So without further ado, let me quickly hand over the stage to both of our mentors. So, Tyler, would you like to go first and introduce yourself to our viewers, followed by Sovit, and then let the conversation flow?
Sounds great. Good morning, everyone. Thank you, Kavita, so much for arranging these sessions. So it is great to see you. I feel like every
It's
time
great to see you again, Tyler.
every time I make a trip over to India, we get to spend a little bit of time together, and that's
Yes,
such a privilege, such a joy. I also get to see all of the YUBA students who are passing their exams on social media. So you guys are doing a great job. Uh,
thanks.
just by way of introduction, my name is Tyler Wood. I am a CMT charter holder, and I serve as managing director for CMT Association. And it's a job that I've had since 2011. The title has changed several times along the last 13 years. And then I also am the co-founder of a financial analytics company, a fintech software group called Go No Go Charts, and I've been doing that since 2021. My path into finance was pretty circuitous, meaning I didn't take a straight line. I explored lots of different angles before finding this wonderful job that I've had for all these years. In undergrad, I went to a liberal arts college. I studied music. My drum set, I don't know if you can see that behind me, it's still in the bags. I haven't even unpacked since the last performance, but music has always been a passion for me. And sometimes your avocation, the thing that you're most passionate about, it's very hard to turn it into your vocation, the thing that you use to feed yourself and your family. And music is one of those things. It's a wonderful passion of mine, but it's a very hard life if you're going to be a professional musician. So I finished college and I looked at graduate school in music performance in Los Angeles. At the same time, my now wife went to Indiana University to look at their PhD program in biology. And we came back to Minnesota where we were doing our undergraduate together and compared notes. And we ended up going to Indiana, which also had a strong music school, more on the classical and opera side. And instead of going right into graduate school, I decided that I wanted to do some work first, get into the industry, and I went into management consulting, which was a great lens for blending lots of different skill sets. So in an undergraduate program like mine, I learned political science and economics and sociology and anthropology, and I took classes in lots of different departments. And so the management consulting was exactly that. It was how do you take disparate data from a company, sometimes reported to you by employees, sometimes more quantitative, and try to develop solutions to problems. That really hit the bill for me. However, for anybody who's worked in management consulting, it's a bit of a grind. It's a lot of work and a lot of travel, and we finished up 5 years in Indiana. But before we left, I had a great boss who said, "Tyler, you're not nearly as dumb as you look. You should you should really think about getting an MBA so that people know you have some skills right out of the gates, and that those three letters, a master's in business administration, would open doors for you, and it would also fill some gaps in your skill set." I wasn't great on Excel. I didn't have an accounting background, and so I did go get my master's from the Kelly School of Business at Indiana University. And it was a wonderful program. It's a top 20 business school in the United States. But they are very focused. The alumni network and all of the courses that I took were very focused on managing a company. So managerial accounting and corporate finance. And we talked a lot of operations and marketing and how you would be maybe a product line manager for firms like Procter and Gamble or Cummins Engine Company or Eli Lilly Pharmaceuticals, and that's where a lot of my classmates ended up. But when we left Indiana, we left to New York City, and my wife is a biologist. She did her postdoctoral fellowship at NYU in Manhattan. Not a lot of consumer packaged goods companies. Johnson and Johnson does not have a big factory in New York, but what they do have in New York is Wall Street, and it was from there that I realized my passion for markets. It was very early on. I joined in August of 2011, and by September, Phil Roth, Ralph Acampora, and several others had come in just to visit the office, and it was in meeting them, going down to the floor of the New York Stock Exchange, meeting with Jay Woods, who happens to be Ralph's nephew, but took us to a great tour, and we had a great lunch together and just talked about the markets. And what I realized almost instantaneously is that a company is not the same as a stock, and that there is an entire set of different rules that you must follow to really understand what's happening with a publicly traded instrument. It's not like managing a company. And so all of that fundamentals that I studied in graduate school and beyond weren't going to apply in the same way to publicly traded, fast-moving financial markets. And that was the beginning of the end. I've been here ever since. Dyed-in-the-wool technical analyst. It's how I manage our family money and how I think about things in the world. I haven't thrown out all of the fundamental knowledge. That's still important to know, but it doesn't help you make trading decisions. Doesn't help you construct a portfolio, and it certainly doesn't help with managing risk. It helps you understand when things move to an extreme and they're either very overvalued or very undervalued. And it helps me spot things that are perhaps unsustainable in the markets. So that's a lot about me. But Sovit, tell us about your journey. Let's hear from you.
That's a wonderful journey, Tyler. Mm, Great to know about it. I think I'm hearing that for the first time. Yeah. After so many years of knowing you.
Yeah.
Yeah. So my journey, say I'll talk only about the trading journey, right? So that started somewhere in 2007, where I was working as an accounts manager in a company, and I was like at that time I was thinking that okay, work is okay, but I need to create some wealth. I need to have something which can grow me financially. Right, job you'll get a fixed salary. Okay, so that your house will run with it. But I wanted to increase my capital. Right, and that was not happening. By that time I had already worked more than 10 years in accounts, but the you know that the verification was not happening. Okay. So I was thinking what to do. So one option was to become an entrepreneur, but then at that point of time, I didn't have that much capital to be an entrepreneur. So what was next? So you can start trading with a small amount, right? So that is what I thought, that I'll start trading. I initially started with a small capital. 2007 was lucky. There was a bull market in India, so made some money in 2007. But then the subprime crisis came in, and 2008 was a big crash, right? So by the end of 2008, I had invested almost like 3.5 Indian rupees into the markets. Okay, which has become say around 1 lakh rupee or less than 1 lakh rupee, so almost 60-65% gone, right? And it was all based on like I was studying little bit of company fundamentals because I was an accountant, so I was studying fundamentals, but obviously my knowledge was not enough, especially the risk management. As you said, fundamentals don't help you much in risk. Okay, so the risk management was not there, so I will keep holding on. In fact, I will keep averaging the stock when it was going down. So that was the case. Okay, so then by 2011, uh, I thought that I should do something to say understand the markets. and I had two options: fundamental analysis and technical analysis. So fundamental I was already doing, so I was not very convinced with it. Okay, so I thought that let's try technical analysis. So then I at that time there was a 2-day course held in BSC, Bombay Stock Exchange, okay, by Mr. Sanjay Vaid. So I did a 2-day technical analysis course there. I like the concept. I like the patterns and all that. In that, all those patterns and everything was the head and shoulder, triangles, and all those things were there. Okay, so I liked all those things. It attracted me, but I also knew that this 2-day workshop is not enough. In this, since I was there already for 3-4 years into the market, I knew that this is not enough. If I want to excel here, I'll have to learn something in detail. So I immediately checked that what can I do, which is the highest possible designation in technical analysis. So I came across CMT. Okay. So then it was like at that point of time that I enrolled in 2012. I enrolled for the first level of CMT, and we'll talk more about this journey. But after that, I cleared CMT in 2013, and then started multiple firms. Okay, right now I am the CEO of YUBHA, as you know.
That's quite interesting to know. And actually, I even came across few doctors who changed field to join the financial sector and pursued CFT for the same. So it's a very interesting observation. And I would also like to know, Tyler and Sovit, what is the important lesson that you've learned into your like through your journey of CMT? What was your important lesson?
Sovit, why don't you go first?
Okay, the most important lesson, as per me, during the CMT journey and after, say, I've been coaching for almost 8 years for CMT. So, in that, what I have understood is that it's extremely important to be systematic. It's extremely important to be rule based because there will be emotions, okay, no matter what you do.
Mm-hmm.
Okay, there will be emotions, and the only way that you can have some control over them is by having a system
Mm-hmm.
which will tell you when to buy, when to exit, and if it is an exit, you have to exit, right? Otherwise, if you don't have a system, you will keep adding, say, doing something in the market. See, we as human beings cannot sit idle. At least I cannot sit idle,
Mm-hmm.
right? So you will find some, say, even in a bear market, you will find some opportunity to go on the long side. Even in a bull market, you'll find some opportunity to go on the short side. Okay, because there will always be some biases which will creep in with a lot of noise in the market, lot of people you meet, right? Okay, a lot of news channels, lot of media interactions happen, right? So there will be a lot of noise. So it's very difficult to remove that noise into from your trading,
Mm-hmm.
right? There will be some biases which will come in, right? So when you're systematic, even say if you have multiple systems, one signal from one system is a noise for another system, right? If you have a system which is long only, another system which has long short, long only system is long in that stock, and at the same time the short long short system has given a short on that stock,
Mm-hmm.
right? So that is still it is still a noise. You have to still hold on to that long stock. You can short it in another account, maybe in another capacity, based on where you are running this long short system, right? But this is a noise for it. Okay, so this was a very hard learning for me because uh, it till that time I've been always been biased. Say, I did a lot of research in even in Elliott wave, even in predicting the markets. Rated after CMT in 2013, it was a lot of time when I spent predicting the markets. Okay, and it never worked for me. At least it never worked.
Mm-hmm.
Okay, because prediction by nature, it's not the problem of the theory actually. Okay, it's the problem of our human nature that we get biased. Okay, if I have a long view in something, okay, even if there's evidence of it going down, I will ignore it.
Mm-hmm.
Right? Generally, this is what happens with humans. Okay,
Mm-hmm.
and we are no different.
Yeah.
Right? So I think the biggest learning from this journey till date, I would see, is that do not try to predict. Okay, be systematic. Uh, take each and every trade off your system, and do not doubt your system. If you have any doubt, test it. You have the capabilities to back test your system. If you want the, okay, this rule can improve my performance, then code it and test it. Okay, instead of applying it immediately, okay, code it, test it. If the backtest shows that it improves your performance, then implement it, no problem with that,
Hmm. Hmm.
right? But don't just implement things just because you feel that, okay, the market looks bearish now, market looks oversold now, overbought now. Okay, don't take your decisions based on those biases. It's very dangerous. It can erode your entire capital.
Uh, what a perfect answer. The disciplined process, the systematic rules. I think that was my big takeaway as well. To everybody who's on the line, if you are a candidate at some stage of the CMT program, or you're a student at one of the academic partner universities of CMT Association, one of the things that you might find when you are going through the textbooks and learning the CMT material is that each new chapter that you read is going to give you an idea that is immediately applicable, that captures the imagination. In my experience, start with the concept of trend. And of course, moving averages are great, but start reading about Donchian channels and learning about the turtle traders, Jerry Parker, who's now a close friend of the association, how they use Donchian to spot those and systematize, quantify when a move was breaking out of a range. So that was a main entry point. So you've got Donchian channels, and you've understood moving averages, exponential and simple, and then you start adding more and more, and that's just identifying trends. You read the great ones, the authors from the 1920s and 30s, like Edwards and McGee, and patterns that you can spot on multiple time frames in the market, and use those to your advantage. And then I started digging into momentum studies, stochastics and oscillators, and it was a whole world that opened up to me. And I thought, oh my gosh, this is going to be the holy grail. This is going to be the thing that really changes my investment performance. That's really going to give me an edge. So I had trend, and then I started adding lots of different momentum tools. And sure enough, you keep reading, next chapter in the CMT curriculum, you dig into volume studies. And I will admit that I haven't even begun really my journey in the deep levels that people like Buff Dormeyer have done. He's been a guest on Fill the Gap. I was with him in Tampa, Florida for the CMT Midwinter Retreat just a couple weeks ago. Every time I speak to this gentleman, it is an eye-opening lesson in how important volume is. Asset flows, the money that moves in the market tends to lead price moves. It decodes price action, lets you know if it's sustainable or not. Volume is incredibly powerful, and that goes all the way back to Charles H. Dow 130 years ago, talking to us about how important that confirmatory indicator was. So I got really excited about breadth studies. I got really excited about volatility compression. The great John Bollinger has spent a lot of time with us over the last more than a decade that I've been here, and still I'm amazed by how he came to this realization that to innovate Bollinger Bands, to understand that volatility was not a fixed number. It's incredible stuff. Here's my lesson, the most important lesson that I can give all of you. With each chapter of the CMT textbook, you're going to find something that inspires you, that intrigues you, and that you want to put on your chart. I encourage you to do that. Test it out, learn all about it, see how it's calculated, play with it, trade with it. But at the end of the day, if you leave all of those items on your chart, and then you want to also explore Elliott wave counts, and you want to lay over Fibonacci extension and retracement levels on your chart, and you want to spot support and resistance, and you've marked up your chart with trend lines in every direction, you're going to overcomplicate what you're looking at. And so, to Sovit's point, the biggest lesson is you have to have rules. And yes, it's helpful to have lots of combined indicators, a weight of the evidence. You want to look at lots of very different sides of the data to get a real signal. But when it comes to your trading, it is absolutely imperative that you keep it simple. Because as Sovit mentioned, the human emotion, our biases, our ability to contradict ourselves or get a little voice in our head that says, yeah, it broke that line, but I think it's still coming back, right? We've all been there. And so I would encourage everyone to think about keeping your rules consistent and simple.
That's a great takeaway for all our viewers. And also, I would like to know, Tyler and Sovit, how do you keep yourself up to date with our field?
Up to date with which?
In our field, how do you keep yourself up to date?
Whoa.
How do
I
you
am
update yourself?
I'm constantly reading, and I spend almost every day talking to people smarter than I am who have new ways of looking at the markets. Honestly, it's the best job I've ever had because I'm learning so much new material every single day. So I stay up to date by being very involved in CMT Association. I encourage all of you, once you finish the CMT program, that's when the learning begins. And so attend the webinars, come to the conferences, read the journal, go through technically speaking, follow the right accounts on social media, and make sure that you are listening when they are speaking. How about for you, Sovit?
Uh, Actually, I would say little different. Okay,
Yeah.
how I like to keep myself updated is that I have I read the books again and again, the same books again and again, multiple times. Okay, um, I personally believe that the book you like, okay, in one reading or two readings, you don't get the entire essence of that book.
Hmm.
Okay, even the CMT book, if you see, okay, I've read it more than 20 times. Believe me or not. Okay, and each time if I read it, okay, it tells me something new.
Hmm.
There's definitely something new. I make new systems. I will tell you, whatever systems I've made hundreds of systems. Okay, every system is made from the CMT book itself. There's nothing out of CMT system,
Hmm.
CMT book, CMT syllabus.
Hmm.
There's nothing. Okay, that is because I keep reading it again and again.
Yeah.
Believe me, it's like and CMT does upgrades it. Yeah, every now and then, every 1 or 2 years, they keep upgrading it, so you get to read more stuff any which ways. Plus, I go to a lot of conferences, as Tyler said. Okay, I love to go to these conferences. Luckily, some of the conference organizers call me as a speaker also. Okay, so I get this opportunity to speak also and meet to other speakers as well in the conferences, and share our views, right? In that also you learn a lot. You say sometimes some topic, some strategy you would have not even thought of that you can make a system out of it.
Mm.
Yeah, but you will get it some idea how can this person think like that. Okay,
Mhm.
it's totally amazing how people think. Okay, the creativity I've seen in people is amazing. Okay, even say whatever work you see of people like Perry Kaufman. Okay, don't leave any book of Perry Kaufman. Okay, his books are like Bible to me. Okay, that person is a rocket scientist, but say I love his work. Okay, the one
Yeah.
person in which I love the work is Perry Kaufman. He's done, and his books are not easy to read for sure.
Mm-mm.
Okay, they're not easy, but if you read it again and again and again and again, okay, you will understand the crust what he wants to say.
Mhm.
You will understand it. Okay, and that takes time definitely. Reading books is extremely important, I would
Mhm.
say, and read them multiple times for sure. Okay,
Yeah.
and meet, as Tyler said, meet multiple people, multiple. Say even you need say since I've been doing coaching for almost 8 years, even I learn from the students which come to the to attend our sessions, because everybody has their own identity, everybody has their own style. of trading. Okay,
Mhm.
so you will be blown off by these new kids which are coming into the market. Okay, the way they think is mind blowing, I would say.
Yeah.
Okay, some of the students I've met, they are even better than me, I would say, for sure. And I'm sure that
Yeah.
going forward in the coming 3 4 years, you will find these students uh, be CMTs, and they will be, I think, the top managers in the world.
I would agree with that. Everyone who is at the top of their game, it just hasn't met their strongest competitor yet. And the young people now, post pandemic, I have never seen a generation so focused, so committed, and so dialed in on what it is that they want to do. It's incredible. The other thing, so I wanted to ask you is system creation, right? There's a lot of heavy mathematics, but you touched on the human aspect. And I think with Kavita's question about staying current with today's markets, um, there is a camp of people who believe that financial news media is the antithesis of what we want to look at, and for the most part, I agree that I want to react responsibly to what the market's telling me. I want to have rules that keep me on the right side of markets when things change. Oftentimes, the narrative, what we hear and see on TV, tends to be very sensational, tends to be overblown, and it incites fear or greed in the audience. That's what journalism, that's what TV is meant to do. Um, but I would also say that to to really understand something new, you have to also be following how regulation changes, market structure changes, and human behavior changes are going to impact markets. And I think, as a case study, what has happened just in the last 3 years, 4 years, is really, uh, to me, there is a lot of signal just in understanding what other traders are doing, how the traders landscape has been changed. Do you take any credence in the idea of keeping an eye on what the crowd is doing?
Basically, I remember one line in the song by Etsikota,
Yeah.
okay,
The,
the Whipsaw
the
song.
whipsaw song.
Okay,
Yes.
yeah, okay, it says trash the dues, right?
Yep. Yep.
Right. So I do exactly that.
Yep.
Okay. I never see news. Okay,
Yep.
but yes, I do keep a track of news in isolation, like separately, like not every day, every minute I'm seeing news,
Hmm.
but I do track news. Why? Because there's some things which are facts and something which are noise.
Yeah.
Okay, so you need to know to differentiate between facts and noise.
Hmm.
Okay, say a company comes with a balance with a earnings report. Okay,
Hmm.
and then analyst comes with a report on that based on that earnings,
Hmm.
right? So company earning is a fact, it's a new information to the market,
Yeah.
right?
Yep.
But an analyst report or an analyst recommendation is not a fact,
It's an
it's
intuition.
based on the previous fact of the balance sheet,
Yep. Yep.
right? So you have to know that this is just his opinion. This is not a fact.
Right.
People generally are not able to differentiate between fact and noise.
Yeah.
Okay, so that thing you'll have to cultivate
Yep.
within yourself.
Yep.
Okay,
I
any
think.
government change, any change in a budget or in a policy, like something like a GST or something like
Mm.
tax reduction, corporate tax reduction. These are facts.
Hmm.
Okay, and there will be implication in the market of such things,
Sure. Yep.
right? So you should be tracking these things. Okay, but not opinion of various people in the market.
Yeah.
Yeah.
Fundamental data is important. Opinions on fundamental data are not. Um, and in Fidelity Investments in Boston, their chart room is it's like a cathedral to technical analysis. Fidelity Investments is one of the largest mutual fund managers in the world. And it started, Ned Johnson, 3 generations ago, was a lawyer. They actually bought a broker-dealer and started Fidelity. But before they did that, he had a chart room. He was a technical analyst through and through, and it's been part of the lifeblood of the firm since the very, very beginnings. One of the tools that they have on display in this Museum of Technical Analysis is the magazine cover contrarian indicator. So you have this huge wall of charts, and at major peaks and major troughs of the market, they just put the image of the cover story for Time magazine, or the cover story for People magazine, or large periodicals here in the U.S. And it is tracking U.S. markets. But it is amazing how at major peaks and troughs, the sentiment extreme tends to show up in news media or news magazines, and you'll see these covers that the unstoppable bull, and that's in the year 2000 as the tech bubble is about to burst, or at the end of the great financial crisis, spring of 2009, magazine covers saying, this is it, this is the apocalypse, we're never going to recover from this, the world economy is in shutdown, you should take care of your families. We don't know what comes next because this seems like the end. And that was the bottom, and things recovered from there. And so to me, tracking, seeing what happens with, the fever pitch of meme stock traders and diamond hands, what's happening on Reddit, or what's happening with Robinhood, or what's happening amongst the crowd mentality is helpful to me, not because I follow that crowd, but also to get a sense of just how overblown something might become. So, Kavita, back to you. Sovit and I could just chat with each other all day long, but I know you have
Yes.
questions.
Interesting observation and conversation.
Yeah.
So any specific advice that you would love to give to anybody who is pursuing CMT and or entering technical analysis? So, any advice that you would like to give?
Yeah. First of all, good job if you have already picked up the textbook and registered for the exam. Two things that I struggled with was giving myself enough time. Uh, Ask my colleagues, Joel and Kazad. I am always running late to the airport. I am always running late to meetings. I don't give myself enough time. I think I can squeeze one more thing in. And with the CMT program, all 3 of those exams were rigorous. I was able to pass, but I did not give myself enough study time. And to feel calm and prepared going into the test center, I think you really need to give yourself as long of a runway as possible. And what I mean by that is, if you're going to sit for the exam in June, you need to register right now and commit, and open the textbook and study at least an hour every day. Read it cover to cover just to enjoy the reading. Then go back and read it cover to cover, taking your notes. Then you begin your process of doing some practice questions, or working with a YUBHA and a training company, and make sure that you really internalize the knowledge. So don't follow in my footsteps by giving yourself too tight of a window and really, really cramming for the exam. Trying to read those textbooks and prepare notes in just a few weeks or 1 month before the exam, it creates anxiety. And the exams are not designed to try to stress you out or try to make you fail, but they are really rigorous. And the value of a CMT designation is directly correlated to the difficulty of the exams. And employers have input on what goes into the body of knowledge and what skill set they're looking to hire. So they help us in creating very rigorous exams. So they know if they hire somebody with a CMT, they're going to get a person of quality, somebody who has professional excellence and a lot of competence around this particular skill set. So start early, and pace your studies over the full 6 months or a year, so that you don't have the kind of Tyler experience going into the test center. How about for you, Sovit? You train a lot of candidates.
Yeah, I'll totally agree with you, Tyler. I think the biggest mistake with students do is that they don't give them this enough time. I remember in 2012 when I was giving level two. I at that time the results used to come in instantly. Like
Oh,
you
sure.
finish it and you know that you are passed. Okay, so I knew that 2000 level two was very very difficult.
Hmm.
So what I did was that I took only 1 day rest. I completed level one. Okay, came home. Took that day I took a rest. Next day I started reading for level two
Yep.
because at that time there were almost 10 test books, not full test books but part of it.
Yep.
Okay, and I remember there were almost like 2400 pages of reading, or I think 3000 pages of reading was there. And from the day when I started it, and believe me, I was not able to complete the entire syllabus
Yep.
till the end.
Yep.
Okay, I left almost 500 pages of Perry Kaufman's book.
And
Still I
that's
passed.
yeah.
Okay,
Yeah. Yeah. Yeah.
still I passed. That was luck, I would say.
Yep.
Okay, definitely luck. Okay, so but still now you guys have only 700 pages of test book, so you have that opportunity. Read it again and again. Don't feel that you have to read it only once. Okay, read it at least twice, or I would say better that you read it thrice. Okay, also one more mistake a lot of students do is that they are eager to get the designation. Okay,
Yeah.
they are eager to get the designation. I want to be a CMT, I want to be a CMT. Okay, I think that is a very very wrong thought process. Okay, your thought should be that I want to learn.
Hmm.
If you learn, you will automatically learn. So no matter how twisted the questions are, people ask that, okay, the questions are twisted, how will I solve them? Okay,
Hmm.
don't worry too much about twisted questions. Worry about clearing the concepts in your head. If you
Yep.
understand the concepts in your head, then automatically, no matter how twisted the question is, if you understand the concept, you will be able to solve it.
Yeah.
Right, and think about a longer picture. Okay, you don't want to be just a CMT, you want to be a trader, you want to be an analyst. Okay, don't try to mug up. Okay, CMT is not something which you will clear by mugging up. You have to understand it.
Yeah.
No way you can pass CMT by mugging up.
So I grabbed the textbooks. I have three walls of books over there. Most of them technical analysis books, some of them psychology books and behavioral stuff. But um, lucky for you all, you have a consolidated textbook. And what Sovit was mentioning was in the early days, the CMT program was a collection of some of the best books in technical analysis by the innovators themselves. John Murphy and Kirkpatrick and Dahlquist and all of these really great authors. You had selected chapters from each of those books that you needed to study. One of the things that I miss is that today's technical analysts, they have the textbook, which is a compilation of readings from many great authors, and it's a consolidated, focused subject matter that you're going to study from to pass the exam. But all of those books on my shelf, they are, if you read Being Right or Making Money by Ned Davis cover to cover, and you can reread it every year, as opposed to just the few selected chapters that are in our curriculum, you're going to glean something else. Reading the great John Murphy's books on intermarket analysis, I can't encourage you. And read the great
They
math.
are beautiful.
Go back and grab all of the books. For the purposes of studying for the exam, it's very helpful to have a focused textbook that only presents the information that you need to cover to pass the exam. But I do think the lifelong learning, it's just getting started after you've earned your CMT. The other thing that I would say to everybody who's studying or looking into technical analysis is that this discipline and the overall the body of knowledge, what is under the umbrella of technical analysis, is so vast and so wide. And I had worked for the organization for 9 years before I sat down to take a single exam. And what I was surprised by is that there is so much material that it's not a part of my practice. It's not something that I've focused on. And there was a lot of new material for me to learn. Even having worked with technicians at the CMT Association for almost a decade, So when you're going through the curriculum, when you're studying for the exams, uh, be prepared that you might not be aware of some of these things, or that some of the things you're going to learn might not be a part of your investment strategy after the fact. That's okay. You should you should understand what R.N. Elliott was looking for when he was trying to understand the moves of the market and the crowd behavior. That developing a wave theory comes right off the back of Charles H. Dow, who compared the markets to the oceans. And he said the primary trend is like the tides of the ocean, the secondary trend is the waves on those tides, and the minor period or the tertiary trend is the ripples on the surface of the water. So fractal nature of time frames. And R.N. Elliott took that to the next level. I agree with Sovit. I found it difficult to systematize, and I found it encouraging me to have an opinion about where the market was headed, when instead I want to just react to what the market's doing. But those are great tools that some of you might become really passionate about. Cycles work, understanding business and economic cycles, understanding the decennial cycle, understanding Kondratiev wave. Now, the very long term cycles, I find that my time frame for investing is shorter. I don't hold things for decades uh, because the risk tolerance that I have or that my family has just doesn't allow for that. But for you, that might be a big part of your work. And so being open minded to the fact that this curriculum is designed for lots of job roles. You might end up on a commercial hedging desk trying to de-risk an oil company's exposure, or you might end up writing code and becoming a systematic trader for a market making firm. You might be a portfolio manager who is thinking longer term and with larger pools of institutional capital, at which point you have to be very long term, and your relative performance is more important than your absolute return. You might be a wealth manager or a financial advisor, in which case how you communicate technical analysis to your end client is very important. And for you, the behavioral components might be most relevant to your job role. My point is, for all of us, seeing how the other folks use these tools, understanding that the financial market is very diverse and that everybody's got a different strategy to skin the cat, if you will, that's what makes a market. And so if the big mutual fund managers are thinking very long term, market making companies are trading, fractions of a paisa on instantaneous timeframes. You might find yourself somewhere in the middle, and there's a lot of value to be created in those intermediate timeframes. So, I guess my advice to those who are studying: be very open minded, enjoy what you're reading, and don't worry if some of it is not going to end up being a main component of your investment strategy and your career. It's still good to learn. Back to
Yes,
you, Kavita.
perfectly. One
Oh, sorry.
system or one rule here and there, one indicator here and there can change your life. Okay.
Yeah,
You
yeah.
just need one or two systems, okay, to be profitable. You
And there
don't
are new
need
ones,
say 100 different systems, right?
and there are new ones being created all the time. So,
Right.
quick case in point, and then back to you, Kavita. Uh, the anchored volume weighted average price, anchored VWAP, created by Brian Shannon, or explained best by Brian Shannon, a good friend of mine who sent me his book as a Christmas present. Um, the tool, volume weighted average price, was created by regulators so that buy side institutions could see if their broker dealer was getting them proper execution. Were they doing their job to fill your trades in a best possible price? So the volume weighted average price, that data set, was just a check and balance on brokerage firms to their buy side clients. Because we have the new data set, as technical analysts, think about what that information provides. If price is trading below the volume weighted average price, that means that most of the holders of the security are underwater. They have lost money. So, in terms of understanding their behavior and their psychology, that's a really helpful piece of information. Everybody who owns this stock since the IPO has lost money. So now how are they going to behave in their trading? It creates very important support and resistance areas on the chart. That's brand new. And as market structure changes, as new data sets come into play, I mean, tremendous data coming out of the options market right now, and it's a brave new frontier. So keep in mind that what you read in the curriculum in 2024, there will probably be new tools for you to learn in 2026, 27, 28, and beyond. So I guess that's the other piece, is that it's a living body of knowledge, and it continues to develop and to expand. So lifelong learning. All right, now back to you, Kavita. Sorry.
Thank you for sharing such golden rules. And so, coming to investment challenge, so what do you think about the current investment challenge, and what will be your advice to the participants?
You take it,
In
Sovit.
case
I've been talking.
if you are trading, how you go about it, and what is your advice?
Okay, firstly, I would say that it's not an easy job, for
Mm,
sure.
hmm.
Okay, 2 months is a very very small time. Okay, to show your performance. Okay, the first thing, no matter what you are doing right now, how you are performing in the challenge, don't take it like you have done very well or you have done very bad. Okay, because it's just few trades, right? And you cannot judge yourself, or anybody should not judge you on a small set of trades, right? So firstly, be very very cautious about that. That don't take it very very seriously. Okay, second is that, okay, you have to understand US markets. Okay, many people are from India, I know. Many students are from other countries as well. Okay, you need to understand US market. They behave little differently than maybe emerging markets like Indian market, right? So you need to understand their characteristics. Okay, and another important thing is that uh, you have to make a rule, right? A set of rule which you, if possible, test it in US markets. Okay, on those five S&P 500 stocks. Okay, then enter into this investment challenge, because otherwise it's very very difficult uh, to solve this challenge. It's not an easy job, for sure. Okay, so maybe in US market right now, momentum is there, right? If you see, momentum is very strong. Okay, so momentum strategy should work better in US markets as of now. Okay, but this may keep changing. Okay, this is the current environment, and it may change as we go forward. Okay, so try to go with the momentum. I personally believe that momentum trading will work better in US market as of now in these S&P 500 stocks. So choose momentum compared to value investing, which generally people do in this. Okay, and you can use momentum indicators for that purpose. You can use trend analysis, moving averages, linear regression. Okay, all those things can be used, but I think momentum is something which you should look at this point.
You know, the
Yeah.
way that we designed the investment challenge was to try to give you the experience of real portfolio management. What do institutions actually look for? So you'll notice CMT Association's investment challenge. And there are many trading competitions out there. Uh, Ours is very different from the rest. Meaning, when you go on to an online brokerage company's trading game, what they are typically rewarding is the person who took maximum risk and got lucky. You found some penny stock, some super micro cap name, which is very, very volatile. You bet it all, and turns out that company rallied 1,000%. Great. You're the winner of the trading competition because you were super irresponsible. You took way too much risk. You didn't put a lot of thought into it, but you got lucky. Well, that's not what is rewarded in the financial services industry globally. And I think the lesson that should be learned from the investment challenge, above all others, is that if you're doing it right, investing should be pretty boring.
True.
I mean, it's a hard truth.
Definitely.
A lot of people get interested in markets first and foremost because it's exciting. They get interested when there is a buying opportunity, historical low, and things are rallying. Just like the environment we saw in 2020. And that led us in 2021 to some really extreme and very irresponsible trading. So the investment challenge created by CMT Association is an investment challenge. And yeah, you mentioned some of it. It's only 2 months, which is it's not a time frame that any uh, you know professional investor is really concerned with. You're thinking about quarterly returns, annual returns, and then your 5-year track record. So the time frame is much longer. But when you think about your position size and about your rules for entry and exit, this investment challenge should give you the feeling of what is happening for a real portfolio manager. I would also recommend, right, if you want to win, you should own the securities that are going up and don't own the securities that are going down. I think one of our guests on the podcast said, portfolio managers are measured against a benchmark, so they want to beat the index performed X. Did you do better than the index and at lower volatility, lower drawdowns? So by definition, if you want to beat the benchmark, you have to own the securities that are beating the benchmark. And I think the best advice I can give is do some analysis. Look at the sectors of the market. So here in the U.S., we have 11 sectors identified, by ETFs. If you want to keep it really simple, you can look at technology and communications, consumer discretionary, financials, energy, industrials, materials, consumer staples, healthcare, real estate, and utilities. If you look at those 11 sectors and you look at them on a simple ratio chart, how are they doing compared to the S&P? Is the relative strength line, that ratio, going up for that sector, or is the relative strength line going down for that sector? Look at it first on a weekly time frame. Then maybe drop down to a daily if you need more granular level. But understanding where in the market for equities, if we're just talking about the S&P 500, where in the S&P 500 are there leaders and where are the laggards? And right now, the leaders are in some very new areas of the market. We're not seeing the massive rotation yet that everyone had been predicting, and that is probably on its way. Right now, we're seeing technology and communications continue to outperform the U.S. market. So that's where you look for securities that you want to hold. It's really, it doesn't have to be overcomplicated. And if you're doing this right and you're doing it like a portfolio manager, they're going to take a top-down approach, look at the asset classes, look at the sector groups, look at the industry groups within those sectors, and then try to find the things that have the strongest outperformance. So that's my advice to you: is keep it simple and own the things that are going up and sell out of the things when they start going down. That's what technical analysis allows us to do.
That is what is trend,
Yeah,
right?
that is relative strength, exactly. So that, as you're going into the competition, I know it started last week, but do that review each week, separate from trading. Just do a review of the market and see, have the leaders changed? Are those sectors of the market, areas of the market that were underperforming and going down, have they bottomed? Are they beginning to outperform the market? In which case, those are great opportunities for long positions. Kavita, back to you.
So we are almost like our time is almost running out. So any parting shot or advice that you would like to give, or any last line?
My last line is, this should be fun. It doesn't have to be a nail-biting, exciting roller coaster ride. It can be fairly calm and fairly simple, but I think the greatest part of the CMT Association is that the people here are wonderful. I've never met so many folks that I want to bring home to family dinner and spend more time with. And the fact is that as a young kid, when I first joined, they treated me the exact same way as they do now, 15 years later. This should be fun. You are going to make friends amongst the technical analysis community. There are lots of professional bodies in the industry. Some of them are a little uptight and they're not very fun to be around, and they're very competitive with each other. This is a collaborative, supportive, friendly community. So We welcome you all. Thanks for being a part of it, and it's your job to make sure that it stays really friendly and warm and open and collaborative, and you're going to be in charge of teaching the next generation. So that's my closing comment. Have some fun, make some friends.
Great. So, would you like to add something to it?
I would say that it's a huge like it's a big decision everybody has taken to do CMT, right?
Hmm.
So and it will change your life. I'm very very sure. Okay, it changed my life. I think it has changed Tyler's life as well, right? So it has the capability to change our lives. Okay, so enjoy it as Tyler said, but along with be responsible.
Hmm.
Okay, you will be going forward handling money of other people. You will be handling funds for other people, maybe your own family funds you are handling. Okay, so responsibility you'll have to take and be disciplined. Okay, you'll have to make that routine right now. This
Hmm.
is the time when you are beginning. Okay, that you become disciplined, you become organized, systematic, objective oriented. Okay, it because it's a habit, and you cannot change your habit every day, right? So cultivate these habits that you have a particular time to wake up, particular time to go to the office, particular time for dinner or lunch. Make these things in your life very very particular. Okay, this will help you in trading also, because trade, say, you cannot be a good disciplined trader and a bad disciplined person. That's
Hmm.
not possible,
Hmm.
right? So try to be disciplined. All the colleges and schools which we have went through have taught us this discipline, right? Okay, and but at one point of time we are so bored of that we leave it leave it
Yeah.
totally, right? So now it's the time to that you pick it up pick it up again. Okay, and be disciplined. I would say if you're not disciplined, it will be a challenge for sure.
Yeah. Yeah.
So, be disciplined and have fun.
Be
So,
disciplined and have fun. Exactly.
right. So, thank you, mentors, for the engaging and enlightening conversation, and to all our viewers for joining us today. Wishing you all a fantastic day ahead. So, thank you,
Thank
Tyler. Thank you, Sovet. Thank you for joining us.
thank you,
Thanks a
Yeah.
lot,
Kavita.
Kavita.
Yeah.
Thanks for
Bye
organizing the
bye.
session.
Yeah.
See you
And
soon.
Yeah, and
yeah.
thanks for giving us
Bye.
this opportunity. Bye.
Bye bye.
Bye.